I think we will see more companies trying to raise capital through ICO because I think it brings clear advantages over traditional VC funding, and most of it is actually the speed of being able to raise capital. With traditional funding rounds, it is very time-consuming for a founder to be able to raise capital. Some of the funds they're more successful in that, but it still takes a lot of time. And as a founder, you actually want to be focused on building a business and not on raising capital. It's a fun process at times, to raise capital with VCs because it's usually influential and reputable kind of personalities. But you should actually be focused on building a business. With ICOs, especially in 2017, it's been very quick to raise capital, which gives fuel and allows founders to really focus on building a company. The sort of traditional funding routes, they provide more credibility to actually raising capital because investors, like sophisticated investors, they look at startups very differently from retail investors that predominantly invested into ICOs now. I think it was very much driven through hype factors, marketing. It's all pushed up a little bit, and I think as VCs, they look at fundamental metrics. Right? They look at the numbers, they look at the team, they look at the market entry strategy into the target market. How big is that market? How do you, monetize your product? And so it's very different factors that sophisticated investors evaluate. And with retail investors that invest into ICOs, that's completely missing. And that's why I think raising capital from sort of the general public is maybe less reputable, because then that just means you have a good marketing strategy. Doesn't necessarily mean that you have a good product. I don't think the general public will get more sophisticated, but I think the problem will go away because regulation will come in. I do think then there's a need for a professional layer, as I call it, where basically either syndicates or VCs or somebody who has an understanding of an industry will basically guide investors into the right decisions. We'll also see a collapse of the ICO bubble. It's already sort of deflating a little bit now, but I think it's going to get bigger again. But we will see a correction in valuations, and then suddenly it becomes less attractive for retail investors to invest into ICOs. And I think it's going to get closer to traditional VC rounds again. To me, right now we're still in an infrastructure phase where we need to invest into the fundamentals in this technology. So it's about protocols, it's security, identity. It's also kind of the shovels. We invested into exchanges, for instance, because I think there's still a need for regulated exchanges. We're not yet in a phase where we can really invest into depths, I believe. It's more scalability issues that need to be solved and interoperability. So there's really the fundamental problems that need to be addressed first before we can move on to consumer-facing dapps that build on blockchain. So I think we really select fundamental problems that we can invest into rather than consumer-facing apps. The conference has been really good. I met a lot of very interesting people, and especially the one-on-one conversations have been very interesting. It's a very diverse kind of crowd. It's less technical than other conferences, and it's more, I think, there's more investors and business sort of related people, which is different from other conferences so far. So it's been good.